Hi, I'm Mike Tove with AIN Services.
And I'm Bill Alexander with WG Alexander and Associates Attorneys.
Welcome to Money Secrets with Bill and Mike. And welcome to our new season and our new set. It's kind of fun, isn't it, Bill?
Well, it will be.
Yeah. So, thank you for watching. And one of the things that we want to spend some time doing, a little change up from those of you that watched the show before, is we want to talk to you. And so what we're going to do is we're going to cover a topic every week, and then we're going to go out and we're going to talk to just regular folks out on the street.
Or you can just email us.
Absolutely. So we've had a few tax law changes today, or recently, haven't we?
We have, and it's really important to folks.
So that's what we want to talk about today. Please stay tuned, and we're going to go over it. Oh my goodness, Bill, so new tax laws.
Well, it's a new tax year, that's for sure. And you cannot depend on what your taxes were in 2017 because the tax laws for 2018 and beyond are completely different.
Right. And so, you know, we've looked at it, and you're really more of the tax expert than I am. Oh, I'm sorry, I can't use the word expert, can I?
Well, the bottom line is that for most taxpayers, they use a standard deduction.
Right.
And that is doubling. And as a result of that, I think most people think their taxes are going down.
But there's a but.
A huge but.
Right.
And what a lot of folks don't realize is that, well, is that while the standard deduction is going up, the exemptions, your personal exemptions, are going away.
Right.
And it's tricky. And for those folks who have never trusted the government, this is a good reason to why you believe that.
Well, so I guess that's pretty much everybody out there, right?
Well, the bottom line is this new tax law is tricky. It certainly lowers taxes for very, very high income people and certainly for businesses. That's what it was really designed for. And the rest of us, well, not so much.
Well, one of the things, and I did a little homework on this before we came in, and one of the things that I have found, of course, the more people you have in your family, in other words, a couple and then 1 kid, 2 kids, 3 kids, whatever, the worse it gets. And so if you are a family of 3, you know, mom, dad,
one child.
Mom, dad, and 1 child, and you earn $50,000 a year or less, or if you are a family of 4, 2 kids, and you earn $70,000 or less, or like I am, I'm a family of 5, 3 kids, $85,000 or less, your taxes are probably going up.
Wow, that's huge.
I know.
Why is that?
Well, because the exemptions are going away.
Right.
And so, yes, the tax brackets are a little bit lower, but they don't offset how much you don't get to take off.
Let's explain it just a little bit. In other words, the standard deduction for those folks who did not itemize was $12,000 last year. It's $24,000 this year for a married couple.
Right.
So, but the personal exemption was $4,150 per person. So for a married couple, that would be $8,300. So the only benefit in the extra standard deduction is $3,700. Now, obviously, if you have 1 child that you have exempted, then that is, you're losing that $4,150 for the child, so your taxes are going up.
In other words, they're penalizing you for having larger families, basically.
That's exactly right.
Okay. So what I want to do, or what we should do now, is let's go out and let's just talk to regular folks out on the street, and let's just kind of get their reactions as to what they think. And then we'll come back with some money secrets, and we're going to talk about it.
Good idea.
So check this out.
And we'll have some fun.
Do you think your taxes are going to go up or down with this last tax reform?
They're going to go up.
I doubt it.
I really have no idea.
Up. Exactly.
Well, I'm not sure, but I'm expecting less money, so that means they're probably going to go up. Everything else has gone up.
And do you have a plan in place or any preparation to kind of compensate for higher taxes now?
I mean, not much of a plan, no. No.
No, not really.
Yeah, shopping at cheaper stores. Yeah, instead of going to the nice stores, the food stores, we're buying less.
Well, if they go up, I'd have to definitely cut out on eating Shorty's hot dogs. But if they go up, well, that's a tough question. Well, if they go down, I guess I'd have a little extra money to
More shorties.
yeah, more Shorties. Yeah.
Wow, that was really interesting, wasn't it? And
No question.
There are so many different folks out there and so many different ideas. And
Well, there's no question, though, that most folks think their taxes are going down when, in essence, for most people, particularly employees, their taxes are actually going up. The young families out there with children, their taxes are going up in most cases.
Well, one of the things that we ought to address, and I suspect that so many folks out there already kind of know this, is that when they sell a tax reduction act, they're going to talk about all the good things that it's going to do, the glory, right? And they never mention that it's not going to be that way for everybody, unfortunately.
Well, no question about it. The one thing about the taxes is that when you basically lower taxes for some, you have to raise taxes
Right,
for others.
unfortunately.
And it's always with a policy shift, you will see differences in outcomes. And unfortunately, the folks with the different outcomes are going to get shot.
So the key is that what's the money if somebody is going to have their taxes go up, that's not a good thing.
Well, first of all, most folks don't have a clue whether their taxes are going up. And one thing that they have to watch out for is their withholding is gone down in 2018. That means that your employer is taking less money out of your paycheck. Your check is bigger.
Right.
So you think you're going to be able to keep it.
It looks like, so it appears as though, hey, I got the windfall. What happened, and they're going to find out about this officially April 15th of next year of 2019.
Well, I'm advising two things, and I think they're both important. Number one is that people would be wise, particularly if they're in that income category of $75,000 or less, that in terms of their withholding, that they go to their employer and increase their withholding so that they're in essence, that their paycheck stays about the same as 2017 until they find out differently, because they don't like surprises.
No, but now wait a minute. Are you telling me that they actually have to ask their employers to do this? It's not something that will be automatically assumed.
Absolutely. In other words, the withholding has gone down automatically.
The automatic withholding.
Right.
Which means if you are on a salary and you are earning $75,000 or less, please go to your employer and say, hey, adjust my withholdings to be the same as they were.
Well, if people don't like surprises, that's the smartest thing that they can do. The other thing that they can do after April 15th, and that's because your accountant doesn't have time to talk to you before then.
Right.
But sometime as soon after April 15th as you can talk to your accountant.
Which means after they get back from vacation.
In essence, it might be 1st of May,
Right.
because most accountants are just totally wiped out by April 15th. But the bottom line is you need to talk to your accountant to basically look at your expected income based on this new tax act as to how it will affect you personally, because everybody's different. Your taxes may go up, it may go down, but you can do a pretty good job if you basically let your accountant see what it is and apply the 2018 rules to you.
Right. And so the key is it's not about whether they go up or go down as much as it is not having a bad surprise.
Exactly.
And
Well, I
So-
mean, for the most part, I mean, truthfully, most people are not going to see any significant change in their taxes. But for some, they'll be huge. And I'll give you one example that just blows my mind. And why Congress did this, I have no clue. But for those folks who pay alimony, boy, they're going to get the shock of their life, because alimony has always been deductible to the payer and basically reportable as income to the payee. And that has been switched. So anyone paying alimony no longer gets a deduction, so their income taxes are going to go way up. But the receiver of the alimony, they won't be paying taxes on what they receive.
That's
So
not good.
that's nice for them, but
Yeah.
the payor is going to be really shocked. And the secret for them is to go to their family attorney and file a motion to have their alimony decreased based on a change
Right.
of circumstances.
Now, one thing is we've talked to folks about, are you going to see your taxes go up? But the truth is that there's another group out there that will benefit.
Absolutely.
And so let's go back out into the community and talk to some folks who are expecting to actually benefit and see their taxes go down. Stay with us.
So, do you think your taxes are going to go up or down with this last tax reform that just passed?
I actually don't know much about the tax reform, but what I can say is I can't imagine that they would go up very much because I don't make that much money.
Okay, I have no idea.
Well, I'm not 100% sure, but I believe they're going to go down.
Definitely, our taxes will probably go down.
I'm not sure.
Down.
The age demographic I am is not in an income appreciation age range. I do not expect my taxes to go up.
All right, so if they go down, is there anything you would spend the extra cash on?
Well, I don't really know. Maybe I would spend it on just maybe my basic needs, and anything above that I would evaluate if there's a way that I could maybe use my money to help other people.
Yeah, I would probably put it back towards school.
I definitely would probably invest it, back into savings and stuff like that, and just be able to maybe afford a trip, for the family.
Well, we're buying a house, so I
And we're
definitely
buying a
would put it towards the house.
Yeah, put it towards the house as well.
Shoot, probably spend it on books and other things for college and little extra spending money here and there.
That's a very responsible answer.
Well, that was interesting.
Sure enough. And there will be some folks who pay a little less tax.
Right. But, and then that's a good thing. And then for the folks, but what do you do about that? In other words, if you have a windfall, what's a good thing to do? Well, one thing that you don't want to do is just go blow it. Hey, I got extra money, let's just go have a party, because it's going to go away in 8 years. And
Well, it may go away before that.
yeah, well,
but
that's true, too.
we'll see.
So, if you have a windfall, one of the things that you want to do is make it work for you.
That's true.
And
No question
so
about it.
that would be where some good financial counsel as to what to do with it, whether it's invested or there's 1,000 things that people can do with a little extra money, but if you've got it, make it work for you.
Well, there's no question that, and that's great advice, Mike, of course. Now, who's getting the big windfalls? Well, we know that the folks who have income more than $425,000 per year,
Right.
those folks are getting the biggest windfall because their tax rate is dropping a lot.
Sure. But let's be honest, the vast majority of folks that are joining us, probably not in that category.
Oh, I realize that. I mean, the bottom line is the more income a person has, the bigger the windfall that they're getting. And
Well, almost, because there's one more little, see, the tax laws are so complicated, and every time they change them, they just make it worse in a way.
well, no question about that.
But there is, you were mentioning earlier that there's one other little surprise.
Oh, are you talking about for the folks who itemize?
Yes, because people that make more money tend to itemize more often.
Well, that's no question about it. And so, again, it goes back to the loss of your personal exemptions. So that for every person, that personal exemption is $4,150. So for a married couple, that's $8,300. Now, we know that the standard deduction is going up to $24. But if you itemize, you don't get to use the standard deduction.
Right. Which means that it could go actually,
well,
you get the bigger of the two.
Well, what it really means, and you have to think about this, is that, okay, so you're not getting that $24,000 benefit because you're itemizing, and then you're getting pinged for an additional $8,300, and that's assuming that you have no children.
That's what I was going to say. And so a family of four,
Well,
it's
then
double
you're
the 83.
then you're talking about 16,600
Right.
that you're getting pinged on top of that. So in essence, you have to add the loss of your personal exemption to the standard deduction. So that pushes you over $32,000. So for a lot of folks, unless you have itemized deductions that exceed $32,000, then more than likely you're going to be taking the standard deduction. So you have to compare, but you can see how your taxes could be going up instead of down.
It's a lot of numbers, and I think that the bigger message here is make no assumptions.
I think so.
And it's really important, and we kind of alluded to this in an earlier segment for the show today, but you've got to find out. You've got to find out what your situation is really going to be.
People need to go to their accountant early on to see how these new tax laws will affect them personally, because even folks that they think it's a no-brainer that their taxes are going down, that may not be the case.
Well, and this is where the real money secret for today, I think, is because if people tend to pigeonhole their taxes. So I'm going to worry about last year's taxes this year, and then I'll worry about this year's taxes next year. And the problem with that is there's no opportunity to plan.
Well, and you can't plan in December or save the money that's necessary to pay the taxes.
It's not December that's when they do it.
Well, you have to pay it in April.
Well, I know, but everybody waits
different.
until January and February and March to start
And of
preparing.
course, next week we're going to be talking about businesses, corporations, businesses, small and large, and how the tax code affects that, which is very different. But for those folks who don't have businesses, and this is even high tax people or low, they may be paying more tax rather than less. But everybody needs to budget, and don't wait until this summer to figure it out.
No, and of course, the timing is so critical, because right now everybody is scrambling to get their 2017 taxes put together.
Right, and we know that for 2018 the tax rates are going down a hair. They're not going down as much as people think they're going down, and with these other changes, their actual tax liability may actually be going up rather than down. And that's where people are just being fooled by the conversation that's taking place.
You've been watching Bill and Mike with Money Secrets. Bill Alexander is an attorney with W.G. Alexander and Associates in Raleigh. They focus on estate planning, asset protection, and elder law. Find them at wgalaw.com. You can catch Bill on the radio on Saturday mornings at 11 a.m. with Asset Protection Today on WPTF 680 AM. And come join him on every second Wednesday of the month for a free seminar. Just call 919-256-7000 for more information. That's 919-256-7000. Mike Tove is a financial planner with AIN Services. They can be reached for all your planning needs at 1-800-363-2296 or online at ain-services.com. You can also join Mike Tove for seminars on how to take control of your retirement. Just call 1-800-363-2296 to find out when he will be in a city near you.
Well, that was fun, wasn't it, Bill?
It sure is. I hope folks have enjoyed the show this week, and this format we're going to keep, and I hope you will enjoy it. It gives you an opportunity to ask questions.
Yeah, email us. And
well, you know, actually, if you want to be in front of the camera, then
we're going to be out on the streets with our cameras, and maybe we'll be interviewing you sometime.
Yeah.
But
of course, the folks who don't want to be in front of a camera,
well, you can just run the other. You can go
email us.
Just say, hey, no. But next week we are going to talk. We're going to continue this, and we're going to talk more about the corporate side, because there's a lot of small business owners out there.
Exactly, and the
they,
law does affect businesses in a big way, mostly a positive way.
Right.
But you know, to where, you know, as we learned today, individuals not so much. Businesses are going to get a nice break.
So join us next week, and we will pick this up. See you then.